welcome on board Suresh Iyer, the MD and CEO at Canfin Homes, joining in on the show right now. Suresh, hi, morning. Your business is growing at a rate of around 10 odd percent, slight underperformance as opposed to what the peers in the industry are up to. Tell me what's the outlook from here onwards, your AUM guidance in specific for FY25, and can we expect the pace of growth to improve in the near future?
A very good morning to you. See, in the Q4, we had a 23% growth over Q3. And we very well know that in the second quarter, we had some issue because of which, the second and third quarter, we had a dip. So basically, now that in Q4, we are having a good growth over Q3, we are looking at a situation where we should be looking at positive growth going forward. And going forward, I think we should expect somewhere around 15% growth in AUM. That is what we are targeting for FY25.
So this is coming. Can one really look at the base number and say that the base number is effect because you had consciously slowed down your book, and as a result, the percentage number actually will be different?
Well, you can say that because in the beginning of the year, we did have a very good growth in the first quarter. But in the second quarter and third quarter, we focused on strengthening our processes and in ensuring that, the quality of the book and everything is good. Therefore, in Q2, Q3, we had an impact in terms of disbursement, and that has impacted our overall growth for the year. So 11% is definitely because we slowed down midway during the year. And now that in Q4, we are back to a run rate, which in fact we started in December itself, a run rate of about 700 crores a month disbursement. And in this quarter, we have had almost close to 800 crores of disbursement in a month. So we are looking at somewhere around, you can say about a 15% AUM growth should be back.
Your NPAs, both gross as well as the net, they're pretty much where they were even in the previous quarter. Can we expect any improvement going ahead?
Well, actually, in terms of gross NPA, we have reduced it from 0.91% to 0.82% in Q4. We were at 309 crore NPA in Q3, and which has come down to 286 crores. So basically, that has been a gross in an absolute value. Also, we have reduced the NPA as well as in terms of our percentage. Also, we have reduced it. And just to give you a small number, in last year, we had in the non-restructured book, we had a gross NPA of 0.55%, which as at the end of March 24, also, we are having a 0.55% gross NPA in terms of the non-restructured book.
What is the outlook then when it comes to, the corporate governance checks and systems? I just wanted to understand because, there have been some frauds in the past that have been detected. Can you just give us the latest update, what's happening when it comes to the Delhi branch and shed some light on the real picture for our viewers?
Sure. See, as I said, in the second quarter, we had a small issue in one of our branches in North, that is in Ambala. Since then, we have strengthened our processes. We have taken a lot of steps in terms of centralizing processes, in terms of strengthening some of our processes. We have also put in a lot of effort in terms of training, in terms of additional checks for this. Our 100% of our loans, we have now started having a credit monitoring from the head office. So all loans which are sanctioned are also being reviewed by the head office. So all these kind of checks definitely will help in strengthening the system and the processes. Now, as for Delhi, I don't know what because there is no such thing. I'm not aware of what you're mentioning, Delhi branch. Probably you're mentioning about Ambala branch.
Okay, so no, just wanted to check then that there is nothing happening in Delhi with respect to that, right? The worst is over in terms of any of these corporate governance issues. Absolutely. We just wanted clarification, sir, from your end on these.
No, absolutely nothing. In fact, we are on the track that we have actually strengthened our balance sheet this year. The focus on strengthening our processes, strengthening our balance sheet, and to a large extent, we have been able to achieve that. And going forward also, we will continue to focus on processes and systems and ensure that quality of business is sustained.
Then all the necessary provisioning when it comes to these branch specific issues, or they will continue, or you will continue to provide them in FY25 as well?
See, last year we had and provided for an additional management overlay of about 34 crores. 17 we did in March 23, and then another 17 we did in September 23. So those were basically because we were having this restructured book which was coming out, and we had anticipated about 15% of that book could go into NPA. So because of that, we had made up additional provision. In this quarter, in fact, even in the restructured book, we've had a reduction in the absolute value in terms of NPA. And in terms of percentage, it continues to be within that 15% range that we had anticipated. So since no further restructuring book is pending and everything has come out by November, so we don't expect any further deterioration in the restructured book either. But as a prudent measure, we have continued that 34 crore management overlay in this quarter also. So basically, over and above the ECL provision, we are having an additional 34 crore as management overlay, which we are carrying. So basically, we have strengthened the process. And I don't see any further need to, have additional management overlay over and above this.
Okay. Finally, let's just wanted to ask what the outlook is. There were when it came to the latest fundraising, where will the deployment of funds be utilized toward?
Well, we have always concentrated on the retail housing, and even today we have about 89% of our book which is purely for housing. So we will continue to focus and deploy our entire funds towards core housing business only.
Last question. The real estate cycle is doing well, which means post RERA, the builders also are in a very strong wicket, so to speak. Could you be revisiting and could you be looking at revisiting your non-housing loan portfolio as well?
Not in the immediate future, because we are actually looking at strengthening our pure core housing business only. And last year, if you are aware, we had started focusing on APF business and all. So we would like to continue that focus only this year also. And probably going forward, we will see if when the right moment comes. And additionally, we will also have to have a proper team and everything with proper policies in place before we get into it once again.
And finally, can you just give us some sort of a net interest margin guidance? What is it that you're targeting?
See, our spreads will be around 2.5% is what we are targeting, and therefore our NIMs also would be around 3.5%. Today they are a little higher than that, but you can safely say we will be maintaining it about 3.5% NIM and 2.5% spread.
The one thing which also the market is talking about, aside of your numbers, is the fact that, your deputy MD, Ajay Kumar Singh, was also the head of the audit committee and he resigned. What's the story here?
No, basically he's you would know that the deputy MD comes on this deputation from the Canara Bank, the parent bank that is, and these kind of transfers are quite regular, and he has basically been repatriated back to the bank, and we have another gentleman who has come from Canara Bank on deputation as a deputy managing director.
And it happens as often as 11 months? I mean, is that the norm?
No, it's normally 2 to 3 years. He was there from 2022 onwards.
Right. Okay. Great chatting with you. Thank you so much for taking the time out.
Thank you so much.
If you like this video, then like, share and subscribe to ET Now.